What would be your advice for individuals in the midlife who are just maybe late 20s, early 30s, if they have to really go about building a good portfolio, investment portfolio? Is there a kind of a base level kind of a boundary or a formulas which they can work on, or something for them to understand it very quickly? Is there anything which you would advise?
One thing is to understand where you stand right now. Most of these people don't know. Normal people, they don't take stock of their situation.
Just take a break, understand where you are.
Yeah.
Okay, that's the first step.
So what is your asset allocation like right now? Do you have what? How much you have in real estate? How much you have in gold, fixed deposit, and stocks? So depending on your age and your risk-taking capacity and your earning forecast, you can actually have an asset allocation which is skewed towards one asset class. Suppose you are 55 or 50 and you want to retire in the next 5 years, your asset allocation should not be that aggressive. It should be more towards bonds and fixed deposits and all that. But if you're 30 and if you have a long career in front of you, then you can have a higher allocation to stocks. What people normally do is, at once they marry, the question comes: don't you have a kid and don't you have a house?
Yeah, I
So
mean,
they
at this part of the globe, that is a standard progression, right?
they start working for that.
Yes.
So what happens is that you buy a house and you have an EMI which is so heavy. So suppose you have a 2 lakh income and 1.5 lakh your EMI.
Which is 90% of the scenario in this part of the world.
So the next 10-15 years, you live to actually pay this EMI. On the other hand, if you invest that in SIP for 10 years, you can actually do this without any loans or at all. And you have this flexibility. And what happens is that real estate traditionally gives you returns close to your inflation, which is 4, 5%, 6% at the most.
Yeah.
You may have a rental yield in some cities like Bangalore, but otherwise
But those are very far and few, and I think people
Yeah.
just get emotionally carried by that. And yeah, you're right. Net outcome is that, but I think you have so much of emotional attachment with that kind of ownership of your property, land, and even metal also.
Yeah. And you have the sport in mind, where you want to reach. So you have 10, 15 years kind of thing. All the small things are very, very unimportant. For example, there is a fund called Reliance Growth Fund. Reliance Growth Fund was launched in 95 for 10 rupees.
Okay.
It came down to 7 rupee 50 paise in the next 2-3 years after the meltdown. And it went up to almost 20 rupees in the matter of next 5 years.
Okay.
So somebody who has invested 1 lakh in 95, do you know what is the wealth today? It is close to 4 crores. 4 crores. There is only 8 investors in India who has caught this from the beginning to till now, who has stayed invested in this fund. So this is the story that you can get from a equity-linked mutual fund.
Mutual funds.
I'm not saying other asset class are bad, but basically you have your mix right according to your needs, your retirement plans, your work plans, everything.
I told you so. It'll hardly take you any time to go through that clip. By now, I think you would have got a sense in terms of what we really have it in our channel. Obviously, we are going to keep adding a lot of interesting content. And if you really want to dive in, go ahead, listen to those videos. They have some amazing insight, and I look forward for a lot of stuff rolling out for you folks. Enjoy.